The doubters always said there's no way he's showing the portfolio ever again. There's no way he's doing it. It's not happening. Well, guess what, folks? There is a way. It's happening right now. Maybe it's a no-no. I don't know. Maybe it is. No one needs to know. You don't need to tell anybody. But here I am showing you the portfolio, and I hope you have a great time with it, okay? We're going over every position here. We're talking about the gain loss. We're talking about how large it is in the account, okay? This is big stuff. I hope everyone is excited because we got this one, and I actually just as of this year, started a joint account as well with the fiance. We'll talk about that one as well. Much smaller account, but hey, we'll take a look. So we'll start here with this, okay? The stop line, the top line here with the account summary. Right now, my individual account here worth $126,000. Currently, obviously had a good day yesterday. You know that. Good day on Friday. The overall gain loss on the portfolio, right about $15,644.88, excluding any dividend payouts. So, if you don't recall and you haven't seen any videos before from me, dividends are definitely pretty big, and we'll see that through this portfolio. There's definitely a decent focus on dividends, as I've got some companies that pay pretty high yields, and I earn a good chunk of dividends where the share price appreciation maybe isn't there sometimes. So overall, the good thing to note, I'm pretty excited about this. We're actually coming up on the, I believe it's the 6 year anniversary of the channel here. I think it is, or of the portfolio, I should say, not of the channel. Sorry, um, hasn't been around that long. But 6 year anniversary of the portfolio. Technically, we started off on Robinhood, right? You know my humble beginnings. I showed it back then. There's content on this channel that shows it. I showed it back then. Um, we started with really nothing in this account, and over the last 6 years, we've gotten this to accumulate with obviously dividend share appreciation and just depositing funds um, to $126,000. It's honestly astonishing to me that we are where we are. I mean, it's very exciting when I look forward in the future prospects of what might happen, because that's my goal here. Obviously, build wealth, and I've been able to do so even in very turbulent, very turbulent times right now in terms of the market itself. Um, this year it's been pretty garbage. Year prior, garbage. We saw the massive dip in 2020. Just since really the beginning of the portfolio, we've gone through a lot of turbulent times, right? And that's when the majority of my money has really been put in and stuff like that. Just so you're kind of aware, did want to let you know on this bad boy, I'm doing $150 a week. That's how I keep to my strategy. I'll always set $150 a week to the side in this portfolio. Um, taking a look at the joint account that I do have set up, I told you it's a lot smaller, 3,460, $3,446. Obviously, being newer, I am up 3.8%, which I'm actually fine with. Pretty fine with being up up at all this year. Um, in a pretty turbulent market, I'm okay with being up even just a little bit. So this bad boy, I'm putting in what the heck am I putting in? 25 a week. 25 a week onto this bad boy too. So it'll get there. A lot lesser focus on this necessarily, but we're going to be putting in combined funds into this one too. So it'll grow a little bit quicker there. Um, and then, I mentioned something about focus on dividends, and what do I mean by that? Well, let's take a look. So, um, you might see here on this left-hand side that we are expected, with these two combined accounts, expected to make $4,978 of dividends this year, and including interest, right? There are some interest-bearing CDs in there, and we'll go over that, as well as some bonds. So there is interest coming in as well. So that's very exciting. I mean, we're talking about 5,000 additional dollars of income this year that I really didn't need to do much to earn, right? I didn't do anything to earn it. I am considering adding more, obviously, into the account here. We'll have to take a look, but I mean, we're talking about CDs that are bearing interest of nearly 5.25% at this point, right? I mean, these are ridiculously great interest rates, um, and they may raise the interest rates coming up here. So let's take a look. I mean, I'll be excited. I definitely might buy some more CDs. Can't lie to you. Anyways, let's get into the actual account here itself, position by position. Might be in for a long one. I hope you are ready for it, because I freaking am, right? I'm gonna take a sip every now and then just to make sure I, don't die out here or choke into the microphone. Beverage of choice today, you may ask. It's an A&W cream soda. Maybe not the most hydrating fluid, but by golly, is it delicious. Yeah, and it's 9:30 a.m. and here I am drinking an A&W cream soda. The good thing about this is what adult life is like. You can do whatever the F you want. That's how it's like, okay? All right, let's get crack-a-lackin'. Crack-a-lackin'. Starting off, and we're going alphabetical here, folks. Alphabetical by symbol, not necessarily by company. That way there's no bias here, right? We're just going by the name of the company, right? That's not bias. Are we biased to the front of the alphabet? Maybe. Starting off with, oh my gosh, Apple. We all know Apple. Okay, what do we have in Apple? 50.4256 shares. You may notice almost all these will have fractional shares, and that is because I reinvest my dividends. So you'll see fractional shares on this. Now, the companies that don't have fractional shares, well, they don't pay a dividend. So that's why you don't see them. So, anyways, with that being said, that one right now, you can see, won't go necessarily into cost based down here, but this is one that I've had in the portfolio for a long time. And because of that, you see the average cost per share is at $70.72. So I am up $5,300 in this one just in share price appreciation alone. It's worth 7% of my account. Pretty excited about that. That's what happens with these positions that I've held a long time, right? It's just easier for me to have bigger gains on them. Now, some of the other ones, not necessarily as much. Maybe they're newer holdings, or the performance has just been pretty cheeks. That's always a possibility too. Anyways, we'll move on. AbbVie. You don't know them. They're a pharmaceutical company most known for drugs like Humira. So I've got 10.29 shares on this one. And you see overall, I mean, this position is worth $1,400. So I am up $332 on it. Nothing incredible. And it does sport a 4% dividend yield, which I am happy about. It is only equating to about 1% of my portfolio. We've talked about this before. I don't have a lot of pharmaceutical companies in the account. So, yeah, that's all right, though. Next, we have Arbor Realty Trust. This one makes me a little bit upset here, okay? I can't lie to you, but we're still happy with it. 195 shares of this one. 195.21. Overall worth $2,400. And I'm up pretty big, right? I mean, we're in it at $11.77 per share. So we're definitely up, nearly $1 a share, about $170. So why do I say I'm upset? Well, first off, the dividends are beautiful, so I'm not upset about that, right? We're talking about a yield of nearly 13% with the current share price. It's cheap. I'm upset because, you know what? I used to be up, honestly, in this position alone, I was up a couple grand in share appreciation just because this one was trading at over $19 a share, even as of last year. This has been a horrific year for REITs, and I've got a decent amount of them. So overall, my account should be a lot higher if we didn't have such a garbage year for these REITs, because I had a lot of gains that have been kind of eviscerated to an extent, but I guess that's a lot of stocks right now anyway, so can't be too upset. Following them, we have AMD, which recently has jumped just because of NVIDIA's beautiful earnings that they reported on Thursday. I've got 15 shares of AMD. I am up pretty massively there. It was at $82.99 a share. I'm up $660 here. I'll take it. About 1.5% of the portfolio. Nothing crazy. Amazon, a position I've definitely been happy to add to this year, 15.18 shares. Um, how do I have a fractional there? They don't pay a dividend. I must have done like a stock slices or something because Schwab does offer stock slices. I must have done that at some point. So sorry for the misleading information there. They don't pay a dividend. Um, overall market value about 1,800. My cost basis is pretty close to where I'm at right now. So we're talking about $118 per share. So I'm only up $31. I believe over the next 5 years, I'm going to be up quite a bit here on this position. And anytime it dips kind of back to where it was, this thing was trading at the low $90, right? It was $90. That was a steal back then. Should have bought some more. And next one here, Apple Hospitality REIT, not Apple, okay? This is a different Apple. Don't be confused. 114.2065 shares. Overall market value about 1,600 on this one. I am up $105, and it's about 1.3% of the portfolio. I like that one, obviously. It's a monthly dividend payer, yielding around 6.5% where the current payout is at. They're able to support that dividend, and I'll take it. I get a nice monthly dividend that I reinvest, and I'll take it. It does make me want to consider here, too. I do have several stocks in here, and you might notice the ones that pay higher yields, they are usually not moving too much in terms of the share price. Now, that does get me excited because recently I've really been considering the prospects of initiating a covered call strategy into the portfolio, meaning any stock with over 100 shares, sell a call option on it. And obviously my main focus is just I'm going to earn income, and then ideally the share price doesn't go up, and then I just earn the income and it's basically free like that. Somehow my nose is stuffed out of nowhere. Sorry, had to clear that. Good thing I can mute the mic, right? That was very disgusting. So yeah, that's definitely one that I've been considering. This one has hovered around $15 per share for years. The years that I've owned it, it's done that. So I'd be considering that for sure. Next, we have Apollo Commercial REIT. We've got a 178.48 shares here on this one. Total market value about 1,800 again. This one, I am down about $219. So this one was one that I was up pretty big on, actually. We're talking about, I was up nearly $1,000, I believe, on this position alone. When it was up to around, $16 a share, something like that. I can't remember where it was at, but now I'm down on the position. Hey, I'm not too upset again. This is one that pays 14% yield too. I earn a massive dividend every quarter. I reinvest it, and I earn even more in the next dividend payment. So I'm okay with that. I'm okay with the state the company's in. It's all right with me. Activision Blizzard, disappointing one here. 15 shares. I am at about $1,100 of market value total on this one. Only a little bit less than 1%. I'm disappointed in this one because obviously there was that main focus on the acquisition of, or from Microsoft, I should say, that was banned in the EU. Because Europe is a bunch of wussy, sissy babies, they wanted to ban that merger, and now Activision Blizzard was up quite a bit, and now they have fallen quite substantially because of that. I am still up, a little bit here, but still frustrating, right? Still frustrating. Could have been a lot better for me. Bank of America, 41.71 shares. Warren Buffett's favorite holding, man. He loves it. Warren Buffett loves it. And on this one, we got a market value around 1,100 yet again. Less than 1% of the portfolio, right? I am down on Bank of America, about $148.85. Been a pretty rough year for the financial industry as well. All these financial stocks have been getting hit, including the next one, Citigroup, 18.26 shares, worth about only $800. I am down $90. So, been hit kind of a decent amount on that one. No worries there. Carnival Cruise Lines. You may notice the exact share count of 100 here as to, what I spoke about earlier. I've got plans for Carnival Cruise Lines, right? This is one that really does not show much movement over the last last couple of years, even honestly, since COVID, it just it went down to $6, then it's bounced back to this level, and it's kind of stayed at this level for over a year. So maybe trying to initiate a covered call strategy. We'll see. I haven't committed on it just yet, but I definitely might. Um, I am down $44 in terms of share price on that one. Not the end of the world. I'm not too upset about that. Costco, after them, took a decent dip here, or was taking a decent dip here yesterday, and then actually recovered decently after the earnings report. 3.02 shares, not obviously a lot there, but that does equate to $1,500 of market value because they're $500 shares. I am up $222 on that one, so I am not too upset with that one. It's been a good position. Then we get Cisco, Cisco Systems, 18.39 shares. Another position that's not too massive, $917 in market value. I am up $97 overall. All right, another clear there. I don't know what's going on, but most stuffed I've ever been once I started talking. I've literally been fine, and all of a sudden I'm stuffed. I don't get that. And then, one second here. Okay, then we go right into Disney after them. 30 shares of Disney. And then for that one, market value of $2,648. I'm down $889. That is terrible. That is terrible. Garbage performance on Disney. There's no doubt about that. We get Domino's Pizza after them. Pizza. Domino's Pizza, another one I'm down on. I can't lie to you. It's been painful. 4.0315 shares. Sorry, important response I had to send there. I am about $1,200 of market value there, down $282 on Domino's Pizza. What a shame. What a shame. Ford Motor, 158 shares here for Ford Motor. And for that one, you see overall, we're doing okay on Ford, right? $1,900 of share, of market value. I am in at about $9.32 a share. I did pick up a lot of shares when it was dipping quite a bit. Most recently, even last year, and obviously during the COVID time period, 2020 it dipped quite a lot. I was able to pick up some shares at $6 and lower my share cost quite a bit. So I'm up $439. I'll take it. Gillette, Gilead, whatever you want to call it. Look, I should probably know the name of this company. I've had it for a while, and I just refuse. I only read reports. I refuse to listen to any sort of earnings calls. I just read the reports, so I never can find out how it's pronounced. Who knows? 15.44 shares, $1,190 of market value. That is up $200 though on this one, so I'll take it. Not a massive position here for me, but we will take it. Another smaller position here too, 96.20 shares of Gladstone Capital. This one, I am up $14. It's only about $911 in the position. Nothing crazy, but we're up just barely. Alphabet and or Google, 10.18 shares here, about $1,200 of value. We are up $298 here on the Googly Google, so we are okay with that. Home Depot, only 2.02 shares here, so nothing massive. Again, only a $591 market value. We are up $130 still, even in that. And you know that's because this Home Depot, my initial one share, has been here since the dawn of the portfolio. So that's why I'm, up to a pretty good dollar amount on that one. And obviously in terms of percentage gain, quite massively too, because I've only paid $228 a share. And it's worth $292. I recently acquired that second share not too long ago, actually, because why not? I want another share. The one share was lonely. HPQ after them, HP Incorporated, you know them, 26.72 shares. We are overall up $145.85. Still a stock trading incredibly cheap. still think it's got a bargain on it, so I'm excited. I'm gonna be holding on to it. Hasn't moved too much, but we'll take it. It's all right. About pretty small position for me still too, so nothing crazy. All right, then we got Hercules Capital, newer addition to the portfolio. I don't even know if it was in there as of the last video that I had posted on this. 111 shares here of Hercules Capital. A massive dividend over 11%, plus they also offer a supplemental dividend. That's kind of why I got into it. Market value about $1,600. I am down $80 in share price on this one. I am definitely up quite a bit with the few dividends I've earned so far. I think I've earned 3 dividends since I've owned it, each equating to around $70. So I am definitely up on the position overall, but in terms of share price, I am down a little bit. So let's just be honest with each other. IBM after them, 5.18 shares of IBM. About $668 of value, nothing crazy. I'm up $72 on this one. Intel, really my biggest percentage loser here. This thing's a piece of garbage. There's no doubt about it. 17.65 shares. Only about $512 of value right now. Thing's down $375, right? I'm in it. I'm in a pricey $50 per share. It's at $29 per share. That's a shame. What a piece of garbage. iRobot, 10 shares of iRobot here. About $300 of market value. So small position. I am down $179 on this one. So that one's been a bad performer too. There's no doubt. Iron Mountain. Let's get into a good performer here for once. Iron Mountain, IRM. You know I've had them for a long time now. 60.22 shares. Earns a fatty of a dividend. That's going to be $3,200 of market value. I'm up $1,236 in this one in share price as well as a nice dividend. So that's about 2.5% of my portfolio is an Iron Mountain, and I'm happy for that, right? It's been a great performer for me. Coca-Cola after them, 14.26 shares. So 14.26 shares there, and that is equating to $859 of market value. We are up $95.23. I'm not in that one for necessarily share appreciation. It's kind of one of those rock positions, it just basically sits steady, doesn't do too much. It's not a massive position, but it's good because it doesn't move too much. So after then we have Kohl's, another kind of a big loser here. There's no doubt. We got a string of winners coming up, so don't you worry. Kohl's, we are at 75.19 shares, and that is going to be worth $1,500 right now. We are down $676 on this one. Now again, pays a mighty dividend over 10% right now because these share prices decreased so much. Jumped a decent bit on earnings last week here, but still we're feeling the pain on this one, right? $600 down is pretty painful. I've used the time to acquire a few more shares, so we'll see what that looks like. Lockheed Martin, a brand new addition here. I actually did not put in enough to purchase a full share, so I did a partial purchase here. Of a 0.94. Let's round up here. So overall, only worth $421. I am down $23 on it actually still too already. So that's kind of painful that I just did that and I'm already down, but that's all right. Lowe's, what a shocker. Nearly the exact same share count as Home Depot, 2.02. Whoa. I am yet again, I've had this one for a long time, so I am up $119 on this one, off of just a $417 market value. So I'm up pretty big on Lowe's as well. Those home improvement retailers, they have been doing good things for me. Now we'll get into some big winners here, folks. So Main Street Capital following them, 47.76 shares. Worth about $1,800, right? About $1,900 actually. We are up $233 on that one. It's about 1.5% of the portfolio. We'll take that. That's a nice win when you include a 7% dividend yield on top of it. Pretty nice, right? I've been earning that for a couple years now. Now, let's go. Meta Platforms, told you about this one for a long time. 32 shares I've got on this one. Was able to pick up a couple more on the dip we had earlier in the year. That one is worth about $8,385 right now, nearly my largest position, second largest position actually. I'm up $2,465 on Meta platforms. Very excited about that one. It's been great. 6.65% of the portfolio right now. If they can get back to $350 a share, I will be pretty excited. We'll see, because they were there one point, and guess who didn't sell? This guy. Um, Sorry, Microsoft after them. Another big winner here for us. 10.36 shares, worth about $3,449. I'm up $1,800 here on Microsoft. We'll take that. Micron after them. 10.06 shares at about only $700 worth of value there, $740. I am up $287 though on it, so that's pretty exciting. Neo. Why do we even talk about Neo? Okay. I only have 25 shares left remaining on this one, and it's just been completely going away, right? I sold most of it when it went up to $20 per share. And I've just been holding on the residual 25 shares. I did hold 200 before. Got my gain. I am still technically up massively, right? I'm at $1.53 per share, so I'm up $154 or percentage gain. It's my highest percentage gain I have, but still, yeah, that's just let's just forget about that one. Nvidia, big banger here, 6.0 shares, or let's just say 6 shares here, okay? Worth about $2,300. You may notice on Thursday this week it jumped up literally, I mean this literally, $100 per share. It actually ended up only $85 per share on the day, but at the open it was up $100 per share. Kind of wicked. Overall, I am up, 422% on this one technically, or $1,890. Oh, it'll show me on my Neo one. My Neo one, I'm up only 402%. I have lied. I didn't even realize this. How did I not know this? There was a feature at Schwab. If you hover over the gain loss, it'll show you your percentage gain. Let me see my Apple one. 149%. Let me see my Meta one. This is exciting. I'm up 41% on Meta. Okay. 109% on Microsoft. That's exciting. I didn't know that. Anyways, New York Community Bank, 47.83 shares here. Once again, nice dividend yield in this one. I am down $2.18. Nothing crazy again. Nothing crazy beyond that. But they've been taking a hit with all the regional banks this year. And they've been able to bounce back, obviously, because they purchased the assets from Signature Bank. And they're growing their portfolio. So that's led to a decent rebound for them, right? Realty Income, symbol O, the monthly dividend company. You know them as that. 52.91 shares here, about $3,100 in value. I am down because of freaking share price this year, $32.48, $32.48. No fun. Omega Healthcare, another one of these REITs that I am down on, 90.53. It's a trend here. They've lost a lot of value here this year. 90.53 shares, about $2,564 worth. Down $88. This one, I kind of enjoy this one still too in the account. Probably would consider adding to this position to try to get it to 100 shares as well. And the reason being, it's one that's been hovering around the $28 to $30 per share line for a long time. And I'd be considering doing, potentially covered calls on this one. Just have to bring that one to 100 shares, which I'm tempted to do. I certainly might. Penn Entertainment after them, 20 shares of Penn Entertainment. This is garbage. $512.80 of value. I am down $292 on this one. That's a stinker right there. Let's skip them. PepsiCo, 5.09 shares, worth about $936. I am up $125 from PepsiCo. We will take that. Plug or Schwug Power, garbage, trash power, 8 shares of that one. Oopsies. I did make a big gain in this one at one point, and then I bought back in when it was at like $20 a share, and it it hasn't worked out here for me. Let's just be honest. So now I overall in this position off these 8 shares, I'm down $128. I mean, it's not great. Down 66%, but I actually made a lot more than that on my initial position when I owned. I think it was 50 back in the day. I owned 50 shares at like $2 a share, and then it shot up. So technically, I made more than this, but now doesn't justify a garbage loss. Prospect Capital, 295 shares on this one. A lot of share price depreciation this year. A lot. I was actually up pretty big. This thing was up at over, $8 a share, and I was up pretty big in terms of share price as well. Now I'm down $186. Now it does pay a nice monthly dividend. We're talking about 11% annual yield. I'm still fine with where it's at. Pays a good yield for that share price. And honestly would be a good pick for covered calls as well. Just being honest. Qualcomm, 5.09 shares. Only about $562 of value there. I am up $31 though on that. Nothing crazy. Rhythm Capital, another one that I was up massively on. What a shame. 185.19 shares at about a $1,500 value. I am down $214 or 12%, so I'm not too upset, but could be better. Starbucks, that one, 10.16 shares there, about $1,000 of value. I am up $206 on that position still, so I will take that. Charles Schwab, 15 shares of Chucky Schwabe. Only about $800 of value there. I am down $36. That's one that has been destroyed this year. I mean, we're talking about the share price was over $80 per share at the start of the year. Now at $53. Pretty painful there. Stitch Fix. Now this is the worst position I've got. $100 shares on this one. Not planning on a covered call strategy. This thing's a piece of trash. I just had 100 shares. All right, and that's worth $350. I am down $458 or 56%. That's a piece of garbage. Shopify has been a great performer for me. It was down quite a lot for a while, but we do have 60 shares of that one. Worth about $3,500 now, just because I built onto that position when it was a little bit cheaper. I am in at $46.62 a share, but I'm up $758 right now. I'll take that quite a bit. I'll take it. Stanley Black & Decker, 10.21 shares. Kind of been a stinker here as well. $800 of value, down $109. These classic, like Domino's, Stanley Black & Decker, these classic dividend stocks, these rocks of portfolios, they've been garbage this year. Target, 10.2 shares there. I am up $206 on Target's position. We will take it. Tapestry, 30.76 shares. We are up $609 on Tapestry. We're going to take that. Tesla, not much Tesla. 1.3 shares of Tesla. I know I got that one for a partial share too. It's a very, very small position. I am up $70 on it, but it's a very small position. Vici Properties, definitely pretty okay with this one. 51.87 shares. I'm only up $57 here. Pays about a 5% yield, but I feel pretty good about where this one could go here. Welltower, at 10.33 shares, another pretty small position, only about $759 worth here. I am up $72 of share price there, which I'll take. And then technically our largest position is going to be in Walmart, the classic Walmart, 64.24 shares. Overall, I'm technically in at $107 per share. It's at $146 per share. That's a nice gain, right? I'm up 36% or $2,500. Now that's a rock to the portfolio, that's for sure. That's about 7.46% of the portfolio. That's quite a hefty amount, right? Quite a hefty amount. Then we get into our ETFs. We'll crack out these really quickly. Starting with DES, that Wisdom Tree Small Cap Dividend ETF, 10.21 shares. I am down $22 on that one. Nothing crazy. IVV, just that iShares S&P 500 tracking ETF, 2.02 shares there. Not a massive position either, but I am up $177 on it, so I'll take it. JEPI, that JP Morgan Equity Premium Income ETF, 46.91 shares, pays a fat over 10% dividend right now. But I am down in share price, about $133, right? I am up obviously with the dividends I've earned, so that's something to consider. But worth mentioning that we are down. We are still down on the share price. JEPQ, a newer one, JP Morgan Nasdaq Equity Premium Income Fund, focused on Nasdaq companies. 23.14 shares, about $1,000 of market value there on that one. I am up $97 on that one, actually. We've seen a decent performance since I've purchased that one just in NASDAQ stocks, and then obviously pays a nice dividend yield as well. Again, over 12%. KBWD, which is that Invesco, KBW High Dividend Yield Financial ETF. That's been hit quite a bit this year, if you know the financials have. 104 shares here. I am down $322 on that one. Pretty rough. About $1,400 of market value there. And then we have the KBWY, the Premium Yield Equity REIT ETF. Yet again, companies that have been hit massively. So I am down $471 on that one off my 78.56 shares. So that one hurts. Pays a nice dividend still too, but I'm down in the share price. We need to get some share price appreciation there. MGC, that Vanguard Mega Cap ETF, 4.04 shares there. I am up $53 on that one. Nothing significant, just very basic there. QYLD, that is the Global X Funds Nasdaq covered call ETF, 49.85 shares on that one. That one I am down $68 on. Nothing crazy. Another fatty of a dividend yield there. I am up in that position with dividends, but technically down in share price, so it's worth mentioning. SCHD, 44 shares on that one. That's about $3,100 there, or 2.5% of the portfolio, so it's a decent chunk here. I am up only $19 on that one. Nothing crazy. Definitely one I've been adding to a lot more recently, as they're a little bit more security on that standpoint. So SPHD after them, 44.29 shares, about $1,700 of value. I'm down 87%. That Invesco S&P 500 High Dividend Low Volatility ETF. There's been some volatility there. What can I say? The whole market's got volatility. There's no low volatility. SPYD, the Spider S&P 500 High Dividend ETF, 24.73 shares. Down $78 on this. The ETFs I'm actually down overall on, if you see there. SPYG, I am up $30 on this one, 17.13 shares. The Spider S&P 500 Growth ETF, the VFH by Vanguard Financials ETF, I am down. What a shocker on the financials. I'm down $61.04, $61.04 I should say, 10.19 shares. VYM, the Vanguard High Dividend Yield ETF, 12.24 shares. I am down $79. And then the last ETF we own, or equity position, XYLD, at 18.03 shares, and now we are down $6. So nothing crazy on that one. A massive dividend yield there too. Then we get into fixed income instruments. I've got a couple here that I've held for a little bit of time. We do have some maturity coming up later in the year, right? This first one being a 3.2% CD from JP Morgan. Obviously not great compared to yields right now. We're talking about a $2,000 sink into that only is technically yielding 3.2%, which I can't be upset with the gain, right? Can't be upset with that. So can't be too upset, all things considered. I'll take it as a W. How about that? Then we've got the 4.25% yielder on that one, a 4.25% CD from JP Morgan as well. Microsoft, I have a 2% bond that is due in 8/8 of 23. So here in a couple months, all of a sudden I'm so stuffed. And our last technically position here is a money market fund, a cash alternative, the Schwab Value Advantage Money Market Fund. $4,700 that is in that one. Currently yielding around a 4.69%. So there you go. That is that for you. That's that account. Really quickly, we'll touch on that joint account, and then we'll go from there. So, one share of Apple. Let's just go at it. One share. I don't think we care about the gains too much. One share of Apple. 2 of our ABR. You know these positions. I have them in my main account too. 3 shares of Ford, 1 share of Meta. That one's been up pretty nice. I can't lie. Microsoft, 1 share there. That one's been up pretty nice. I can't lie. Realty Income, 1 share. Vici Properties, 2 shares. Most of my, most of the money here is in ETFs here. So 5 shares of this iGrow, or DGROW is the symbol, the iShares Core Dividend Growth ETF. JEPI's here, 4 shares of that one. QYLD, you've seen it again, 3 shares there. 6 shares of SCHD, 1 share of SPYD. VIG, the Vanguard Dividend Appreciation ETF, 1 share there. And then XLF, the financial sector SPDR ETF, 5 shares there, down on that one too. And a little bit here, about $1,100 of this SWVXX Net Money Market Mutual Fund. It makes about 32% of the account right now. So obviously a lot into that. Look, at this point, market volatility, I'll accept about a 4.5% return after expenses. I'll accept that any day of the week, right? I'll accept that on an annual basis. So with that being said, that's what I got for you here today. I hope you enjoyed this. I'm going to be enjoying my $5,000 of dividends this year. And hey, I do hope you have a fantastic rest of your day. You have a great one, folks.